This is your morning brief for Wednesday, February 6th. Markets are likely to open up flat. The futures are flat, or as I double checked, they're actually up just a little bit. NASDAQ seems to be up 0.15%, but basically flat. Estee Lauder yesterday was up 11.6%. I didn't think the earnings report was that spectacular, to be honest. I'm not sure that it warranted that much of a rise. I do think it's a good company, but shares have been up about 25% in the last 12 months and then 11% yesterday on an earnings report that said the bottom line was up 25%. That's great, but revenue was only up 7%. So I think given the move that it already had and that growth was only 7% and projections were only for 5 to 6% revenue growth going forward, so I just don't see the 11% being warranted. I do like the company. I think it's a good company. But we have an alternative, Ulta Beauty, ULTA. We have a video report out on that. So have a look at that one, please. Gaming stocks, Electronic Arts and Take-Two Interactive plunge after reporting earnings. But it was really about the guidance. The earnings themselves weren't that bad. For instance, Electronic Arts revenue growth was 38%, but that did miss estimates by about 8%. Earnings per share was up 68%, and a small beat of 0.5%, but the share price was down 16% in pre-market trading. And that is basically from the guidance going forward, and they really took down some guidance on a couple of games. Take-Two Interactive exceeded top and bottom line, but tempers guidance as well. Fortnite putting a dent in their sales. Fortnite's a competitor, and shares are down 10% in pre-market trading. So not great news on the gaming stocks, and in fact I would say it's mostly due to guidance. And all of these companies in this space, they're boom and bust. That's what they are. And I find them really difficult ones to invest in. Maybe good for traders because they are up and down, but it seems like you should buy them when they're at their worst. It just seems like things are going terrible, but then a new release comes out and everybody loves the game and the stock takes off. And right when the gaming seems to be doing the best, that's when you should be selling, and then because before you know it, it literally turns down and everyone moves on to another game. So great business long term, crazy volatile in the short term. Disney, flat revenue as its transitioning to streaming platform begins. They're really trying to do their own streaming, like a Netflix type of business model. This is going to be a difficult transition, I think, because they provide content to Netflix and some other things. So they're going to be frenemies for a while, and I think it's going to be a challenge. I wouldn't be buying Disney while they go through this transition. I think it's a smart transition. I think they need to do it, but I don't know that I need to be an investor while they go through it. I'd rather wait and see how it pans out, and if it pans out the way I think it can and it goes well, I'll be a little late, but I'd rather take the safety of knowing. Snap is up 20% in pre-market trading. Revenue up 43%. And users stabilized at around 186 million. I would not be taking a position in Snap. Users were going down until this quarter, which is why the stock is up 20%. Investors got excited to see some stabilization. And revenue growth is 43%. That's obviously a good number. But, I mean, they're still losing a ton of money. I just looked at our data, and for the last 12 months, not including last night's quarter or this morning's quarter, they lost 1.3 billion, and it's still trading at $9 billion market cap. It's just not my kind of company. I think it's way too speculative. Shares have been not that great. There's a lot of competition in chat, so it's just not for me. But hey, it's up 20% on 43% revenue growth and stabilization of users. Okay, that is your morning brief for Wednesday, February 6th.